Monday, March 30th, 2026. Like and subscribe, The $1 Investor. I recently was talking to a really good friend of mine, an operator from D4. I've known him from almost 10 years now, and he's always been very thirsty for knowledge about investing and making his money work for him. My friend Sunthorn. He was asking me a question about how is it possible to invest in whole shares when some shares are so expensive. He gave me a good example. He was asking me how was it possible to invest with just $1 a day when Apple is $245 per share. And I told him, my friend, this is called dollar cost averaging, buying fractional shares every single day, regardless of whether Apple is up or Apple is down. He wasn't thinking about buying Apple. It was just the example he gave. So hopefully I explained it properly to him and he understood all that I was trying to say. But if he did not, I decided to make this video so you guys can understand regardless how expensive a share of stock is. You can always buy fractional shares at $1 or $5 or $10 or even $20 per day. Whatever you can afford daily, that's what you should buy. I'm not your financial advisor, just a regular bus driver who's found the secret of setting up his investments and forgetting them. I let my investments cook on their own and let the automatic drip do its job so one day I can benefit and reap all the fruits of my labor. Like and subscribe. The $1 Investor. The biggest stock market misconception. Nobody understands. Let me tell you something that most people don't understand about the stock market. Everybody thinks people get rich because they get lucky and pick the right stock. And yeah, sometimes that happens. I saw it myself. I'm part of a big investing group, about 250,000 investors, and there was a guy who put over $800,000 into one stock, AST Spacemobile. He bought it around $6 a share. People called him crazy. People laughed. People said he was going to lose his retirement. He believed in that company. He had conviction. He held his position. That stock ran close to $100. His $800,000 turned into about $26 million. Now listen, that does happen. But that's not how most people get rich in the stock market. That's the lottery version. That's the casino version. That's not the real way wealth is built. The real way wealth is built is slow, boring, and consistent. And here's the biggest misconception. People think you need thousands and thousands of dollars to start investing. That is completely wrong. You can start with $1. Today, you can buy fractional shares of companies like Apple, Microsoft, Google. Those companies might cost $200, $300, $400 per share, but you don't need to buy a full share anymore. So when you invest $1, don't think of it as only $1. Think of it as one employee. Every dollar you invest is an employee that works for you 24 hours a day for the rest of your life. If you invest $10, you have 10 employees. If you invest $100, you have 100 employees. If you invest $1,000, you have 1,000 employees. And what do those employees do? They go out into the world and make you more money through growth, dividends, and compounding. That's how you build wealth. Not by getting lucky, by building an army of dollars that work for you. I started late compared to people who start in their teens and 20s. But I did something very important. I started my daughters early. As soon as they turned 18, I opened investment accounts for them and started them with $10,000. Now they add money from their part-time jobs while they're in college. So by the time they're 30, they won't be starting from zero. They'll already have 10, 12 years of compound growth. See, it's much easier to become a millionaire when you start at 18 than when you start at 40 or 50. But that doesn't mean it's too late. If you start at 30, you still have a 30-year window. If you start at 40, you still have a 20-year window. If you start at 50, then yes, you need a catch-up plan. You need to invest more aggressively and more consistently. But the key to this whole thing is consistency. I've made a lot of mistakes in my investing life. I bought Facebook at $19 and sold it. I bought Tesla at $40 and sold it. I bought Microsoft at $45 and sold it. Almost every investor you talk to has a story like that. The mistake isn't buying good companies. The mistake is selling them too early. The stock market rewards patience. It punishes impatience. You also have to understand something else. When the economy crashes, when the stock market drops, when real estate drops, that is not the time to panic. That is the time when wealthy people get richer, because everything goes on sale. If you are broke and unprepared, a recession destroys you. If you are educated and have money saved, a recession makes you rich. That's why financial education is so important. That's why understanding money is so important. That's why investing is so important. I also want to talk about pensions, because a lot of people don't have what I have. I have 3 pensions. One from UFCW, one from the Teamsters, and one from AC Transit. Those pensions are going to pay me for the rest of my life when I retire, but I'm not depending only on my pensions. I'm building investments, and my investments are like a fourth pension, and then my daughter's investments, that's their pension, that's their future. So when I invest $1, I don't see $1. I see what that dollar becomes in 20 or 30 years. $1 invested today can become $5, $10, maybe more over time with compounding dividends and growth. Now imagine investing every day, imagine investing every week, imagine investing every month, and doing that for 20 or 30 years. That's how normal people become millionaires. Not overnight, not from gambling, from time plus consistency plus compounding. So stop thinking, I don't have enough money to invest. If you have $1, you have enough money to invest, because it's not about the stock price. It's not about how many shares you own. It's about how many dollars you have working for you. Water your money tree. Every dollar is a seed. Every investment is watering that tree. And over time, that tree grows into something that can take care of you and your family for the rest of your life. That's the real way the stock market works. So I need you to understand it's not only about how many shares you own. We will worry about that 10, 20 years, or even 30 years from now. Right now, the most important thing for us is to buy consistently. Buy aggressively and continue to buy every single day, regardless of what the stock market is doing or what the economy is doing, and especially tune out everything that doomsday person is telling you about on a daily basis. Disregard everything and focus on setting up a good relationship with your investments and just buy, buy, buy. Every dollar you put to work earns interest. Every dollar earns compound interest, and every new dollar on top of old dollars gains compounding interest on top of compound interest. You have to stop looking at stocks as whole shares for now while you begin your investing journey. You need to start looking importantly at every individual dollar you invest. Pay attention to your own dollars. You're putting that money to work, and investing it into a great company is 1,000,000 times better than sitting in some bank account losing value due to inflation. Remember, the better a company does, the more that dollar will grow. Like and subscribe, The $1 Investor.